Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 9th of July 2023, and last week we saw a very turbulent end to the week, with gold and silver prices plummeting on Thursday, only to resurrect again on Friday. Why did this happen? Let's take a look. Okay, just a quick reminder, we've set up a second channel entitled Finances Do Matter, with over 120 videos and producing around 5 a week, covering a whole array of financial topics. Last week we even covered Nigel Farage having his Coutts bank account closed, according to the BBC, because he's not wealthy enough, or in reality not meeting the bank's criteria for wealth. Don't miss that one, and we've put links below. Info that is both relevant and entertaining. Now we've placed the link in the description box and comment section for those who've not as yet joined that channel and would like to do so. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold rose $7 last week, rising from $1,919 to $1,926, having hit a high of $1,945 and a low of 1,903, a rise of 0.3%. In sterling terms, it finished the week at £1,501, down £12. It seems to be meandering around that 1,500 level. And in euros, it closed at 1,757 euros. That's down €3. Silver rose 31 cents, rising from $22.78 to $23.09, having hit a high of $23.42 and a low of $22.55, a rise of 1.4% and similar to the previous week's rise of 1.5%. In sterling terms, silver closed at £18.04, that's up 6 pence, and in euros it closed at 21.09 euros, that's up 0.19 euros. Gold to silver ratio fell from 84.3 to 1 to 83.4 to 1. Now the difference between gold's high and low was $42, similar to the previous week's 40, and the difference between silver's high and low was 87 cents, similar to the previous week's 81 cents. Now this is what we said last week concerning our forecast. We expect gold to trade between 1875 and 1975, which it did comfortably, and we forecast silver to trade between 2175 and 2375, again something it did comfortably. Now, before we discuss what happened, and especially on Friday, let's look at other financials. Bitcoin currently stands at $30,221. That's down $290. Equities were also down, with the Dow Jones down 673 points at 33,734. The S&P down 52 points at 4,398. The Nasdaq down 127 points at 13,660, and the FTSE 100 index down 275 points, which is considerable concern considering the size of the FTSE, and that stands at 7,256. Oils were higher by more of a margin, in fact. Brent crude closed at $78.47, that's up $3.57, and seems to be supporting the view that Saudi Arabia, Russia and OPEC as a whole are going to try and keep our oil prices above that $70 mark. And WTI crude closed at $73.86. That's up $3.22. The dollar index stands at 102.27. That's down 0.64 points on the week. So it's broken down below the 103 threshold, which it was sort of struggling with for a little while. In terms of economic data last week, the excitement was really limited to just 2 days, Thursday and Friday, and what a contrast. On Thursday, the ADP employment report announced an increase in new jobs in the private sector of 497, nearly 500,000 new jobs for June, against expectations of 220,000. This pushed 10-year Treasury yields above 4%, and had a knockdown effect on markets and precious metals as the dollar rose, and of course the prospect of interest rate rises later this month. These figures certainly suggested a definitive rise in interest rates on the 26th, not just by 0.25%, but potentially even 0.5%, some forecasters were predicting. However, on Friday the situation reversed, so much in 24 hours. The non-farm payroll report came in much weaker than expected at 209,000 new jobs. Just bear in mind, still new jobs, 209,000, compared with expectations of 240,000. This immediately brought Treasury yields down, the dollar fell below the 103 spot index, and precious metals more than recovered their losses from the day before. We did say last week to watch out for Thursday and Friday. Now, we shall mention this again shortly, but we suspect traders ignored the increase in hourly wages at 0.4% compared with expectations of 0.3%. So, before we look more deeply into gold and silver, what have we got on the agenda this coming week, which could influence prices? And yes, there are some pieces of data that will influence prices. On Monday, we have the consumer credit figures for May. On Wednesday, though, and I repeat this, on Wednesday, the all-important CPI figures for June, by far the most important day of the week. On Thursday, the producer price index, again important, and on Friday, the import price index. So Wednesday is the day to watch and is the last inflation data before the Fed's decision on the 26th of July. Though, admittedly, we also have retail sales figures due on the 18th of July, which will not be insignificant. That's in 2 weeks' time. Let's now look a little more closely at gold and silver. Now, although gold prices rose, and quite strongly on Friday, analyst Gary Wagner published this important piece of information, which frankly we cannot fault. Quote, "Because gold is paired against the dollar, traders took gold fractionally lower, and dollar weakness overcompensated, being responsible for over 100% of today's gains in gold futures, today being Friday. Spot gold is currently fixed at $1,924 after factoring in today's gain of $13.60. However, on closer inspection, dollar weakness added $16.05, and normal trading resulted in a price decline of $2.45. So what Gary is suggesting is that gold did not rise because of trader demand, it rose only because of the decline in the dollar strength. The dollar fell because 10-year Treasuries fell to 3.7%, down from its high of 4.01. Gary also stated, and we fully agree with him, that the jobs report probably will not impact the Fed's likelihood of increasing rates by 0.25% on the 26th of July. In our view, the CPI figures next week, or this coming week, rather, will be the key determinant, and the rise in hourly wages, the increase in ADP employment, and although the figures were below estimates, the US employment report still showed a healthy gain. And together, these would, in our view, suggest that inflation may not be coming down as quickly as the Fed would like. Silver had a volatile week and is holding around the 50-week EMA. $22 is strong support, but if that were to break, and break substantially, we could see silver dip once again to as low as $20. However, to the upside, there is resistance at $24.25, and then again at the psychological $25 level. To be candid, we don't see silver hitting $25 until there is greater certainty about interest rate rises having peaked. We are still receiving hawkish statements by the Federal Reserve, rate hikes by multiple central banks in Europe, and the promise of more to come. Now, we've produced videos on all of these factors on our Finances Do Matter channel, link below. So where do we see gold and silver moving this coming week? Well, it depends. If the markets continue to overreact to the jobs report on Friday, which we think it did, we may see higher gold and silver prices certainly on Monday. But the absolute key determinant for this coming week will be the CPI figures on Wednesday. Obviously, not knowing the figures, it's difficult to make a prediction. However, we would err on the side of caution and make the calculated assumption that whatever happens to inflation, even if it dips a little, it will still not be enough to stop the Fed from increasing rates on the 26th of July. Therefore, we expect gold to trade, as we did last week, between $1,875 and $1,975, with $1,850 to $2,000 as outliers, really depending on what that CPI report says. And we forecast silver to trade broadly between $22 and $24, with $21.25 to $24.50 as outliers. What do you think? Do share your thoughts. Meanwhile, thank you so much for listening. Please give this video a thumbs up, subscribe, press the bell sign so we can spread the word further. Thank you once again. Have a great, enjoyable, safe weekend, and particularly in view of the data being announced, a prosperous week ahead.